All right, let's jump right in. We're going to talk about something really powerful today. How a tiny, consistent habit can totally transform your financial life. Seriously, we're looking at how to turn just $25 a week into a massive monthly income, and it all comes down to one of the most incredible forces in the universe: compounding.
So let's start with this big promise. I mean, it sounds a little wild, right? Taking a weekly amount that's less than a couple of fancy coffees and turning it into a real, legit income stream that just shows up.
And that's really the question we're digging into. Can an amount that small, something most of us could probably find in our budget, actually move the needle? Well, the answer is a huge yes, and the payoff it leads to is kind of mind-blowing.
There's the number, $3,000 every single month. Imagine that hitting your bank account without you lifting a finger. Now, this isn't about getting lucky with some crypto coin or a risky bet. This is the predictable result of a patient, consistent process. So, let's break down exactly how you get there. Okay, first things first. Before we get into the how, we have to talk about a huge mindset shift. So many people think the stock market is just a big casino. But to build real, lasting wealth, you've got to see it for what it is. It's about ownership.
And this right here really shows the difference. When you save money, yeah, it's safe in a bank account, but it's just sitting there. And worse, inflation is quietly making it worth less and less every year. But when you invest, you're buying a tiny piece of an actual business. A company making things, selling things, and growing. You're basically putting your money to work, and that's how it starts to multiply. In this quote just nails it. This is probably the most important thing to get if you're just starting. You do not need a lot of money to do this. Your real superpower is consistency. Starting small and just sticking with it week after week is way more powerful than you think, because the secret ingredient here isn't money, it's time.
So how does this little bit of money actually grow into something huge? Well, think of it like you're building a machine, a compounding machine, and it has 3 different engines, all working together to push you forward. Once you get how these 3 things work, you'll see why even small amounts of money can build up so much momentum.
All right, so here are our 3 engines. First up, we've got dividend reinvestment. Second, there's share price growth. And third, what I like to call the secret weapon, dividend growth. We're going to go through each one of these piece by piece.
Let's kick things off with engine number 1 by talking about dividends. What is a dividend? It's super simple. It's just a company sharing its profits with you, the shareholder. It's a little cash reward just for owning a piece of the business. You could take that cash and spend it, but the real magic happens when you reinvest it. See, when you reinvest that dividend, it automatically buys you more shares of that company. And guess what? Those new shares you just bought, they start earning their own dividends. It's like a snowball rolling downhill, picking up more snow, getting bigger and faster all on its own. Big, stable companies like Johnson & Johnson, or even ETFs, which are basically just baskets of stocks you can buy at once like SCHD, are perfect for this. They give you that steady cash flow to get the snowball rolling. Okay, on to our second engine. Your money doesn't just grow from those cash payouts. It also grows because the thing you own, the stock itself, becomes more valuable. As great companies get bigger, sell more stuff, and become more successful, their stock price usually goes up, which directly makes you richer.
I mean, think about some of the biggest companies in the world. You've got Broadcom, a beast in the tech world, Apple, you know them, Microsoft, a software giant. Their incredible growth has made their stock prices soar over the years, and you don't even have to pick individual winners. You can buy a broad market ETF like VTI, which basically lets you own a tiny slice of the entire US stock market and just ride the wave up. This engine is what builds the massive foundation of your wealth.
And now for engine number 3. This is the one that really puts everything into overdrive. You see, the best companies don't just pay you dividends. They give you a raise. They increase the amount they pay you year after year. So the cash you get from owning the exact same number of shares just keeps getting bigger and bigger over time.
For example, you have companies like Interparfums, which makes fragrances, or the Federal Agricultural Mortgage Corp., which is in agricultural finance. Both have been jacking up their dividends like crazy. And then you have the legends, like PepsiCo or Lowe's, who have track records stretching back decades of giving their shareholders a bigger paycheck every single year. This is what makes your income stream not just grow, but grow exponentially.
Okay, theory's over. We get the 3 engines. So how do we actually put this into practice? Let's build a sample portfolio right now that harnesses all 3 of these amazing forces.
So here's a look at 5 different investments that really tap into our compounding engines. Each one has a ticker, which is just its nickname on the stock market. Now let's look at the numbers. Yield is the starting income you get. Dividend growth is how fast that income grows, and price appreciation is how fast the stock itself grows in value. So in this mix, we've got SCHD for stability, AGM and iPair for that fast-growing dividend, Broadcom, that's AVGO, for explosive growth, and VTI to give us a piece of the whole market.
So what happens when we blend all these together? Well, right out of the gate, this portfolio starts with an average dividend yield of 2.31%. That's our starting cash flow. That's engine number one turning on.
But now, look at this. This is where it gets exciting. The average dividend growth rate is a massive 18.94% a year. This means our income stream isn't flat. It's expected to get almost 19% bigger every single year. That's engine number 3 just roaring to life.
And finally, engine number 2. The average share price appreciation is over 17%. So the value of what you own is also growing like crazy. All 3 engines are firing now. Let's see what happens when we start feeding this machine our $25 a week.
We've gone through the theory, we've built the portfolio, now it's time for the payoff. This is where you really see the jaw-dropping power of compounding when you let it run for a long, long time.
Check out how this thing grows. After 1 year, you've got about $1,300. Not bad. But then the acceleration kicks in. By year 10, it's over $34,000. Look at the leap to year 20, over $250,000. But that last decade is where the real magic happens. It absolutely explodes to over $1.7 million. And this is the most incredible part. Where did all that money come from? Look at this chart. That tiny little bar on the left, that's your money. Your contributions over 30 years were just $39,000. All the rest, that massive chunk of over $1.6 million, that was the machine working for you. That was your money making money.
And this brings us right back to where we started. Remember that promise of $3,000 a month? Well, that $1.7 million portfolio is now projected to be kicking off almost $3,900 in dividend income every single month. We didn't just hit the goal, we flew right past it, all from $25 a week.
So look, the big takeaway here isn't about these specific stocks or these exact numbers. It's about understanding the principle. It's about patience. It's about consistency. And it's about time. And that really just leaves one final powerful question for you to think about.